We're in the middle of tax season right now, and while Congress has been debating what to do about the federal budget, one thing they have not done is figure out how to pay for their own spending. And if we get any indication about what might be coming down the line, it could be worse than we originally thought, because there's a proposal in Congress that would do things like raise your taxes, cut Social Security and Medicare, and even eliminate deductions that you think are pretty much permanent. So in this video, we're gonna walk through exactly what this proposal is, what it means for you, and then what we can do about it before it becomes law. So first off, what is the plan? Well, it's called the Taxreform 2025 Act, and it was released by House Republicans late last year. Now, thankfully, it's not going anywhere this year because we have an election coming up, and Democrats control the Senate. But if Republicans take back the Senate and continue to maintain control over the House, this plan, or something very similar to it, could become law. And that's why it's important that we understand exactly what it does, so we can let our leaders know what we think about these proposals. The main purpose of this bill was to make the Tax Cuts and Jobs Act of 2017 permanent. You know, those tax cuts that were supposed to be temporary, but then Republicans made them permanent with the Tax Cuts and Jobs Act of 2020. Yeah, they want to make those permanent as well, and in order to pay for it, they included several other changes that will affect millions of Americans. Now, here's the thing. Most people just see headlines about tax increases and they don't really look into it. But the reality is that most of us are affected by taxes in multiple different ways. Like when you buy groceries, you pay sales tax. When you go to a doctor, you pay taxes on those services. When you buy a home, you pay property tax. When you buy clothes, you pay sales tax. You pay payroll taxes when you get a paycheck. There are so many different types of taxes that we all pay every single day, and most of us don't even notice. So yes, it is true that we're all affected by taxes, and most of us don't like it, but sometimes taxes are necessary to fund the government and provide the services that we all rely on. It's just a fact of life. But when Congress makes changes to tax law, it affects everyone differently based on our income, our family status, where we live, how old we are, and what we do for work. So it's important that we understand exactly how this proposal works and whether it's fair or not. So the first thing that this proposal does is extend the Tax Cuts and Jobs Act benefits, which means that it would keep the same tax rates that we have now through the year 2034, basically making them permanent. Now, there's some good news and bad news here. The good news is that this means that you'll keep more of your money and you won't have to pay higher taxes. That's great, right? But the bad news is that this also means that Congress doesn't have any additional revenue coming in from taxes, which means that they need to find other ways to balance the budget. And boy, do they have some ideas that a lot of people are going to hate, starting with the state and local tax, or SALT. If you live in a high-tax state like California, New York, New Jersey, Illinois, or Hawaii, then you already know that the SALT deduction is one of the best deductions we have. It allows us to deduct the state and local taxes that we pay from our federal taxable income. And since those state and local taxes can be some of the biggest expenses we pay every year, it saves us a ton of money. But Republicans have always hated this deduction because it mainly benefits wealthy people who live in high-tax states. And they say that it incentivizes states like New York to raise taxes and then use that extra money to benefit the rich. So they put a $10,000 limit on the amount you can deduct, which saves the typical taxpayer about $1,700. Now they want to get rid of that cap altogether. So if you live in a high-tax state and you make over $1 million, then you'd be able to write off 100% of your state and local taxes, which could save you tens of thousands of dollars every year. However, if you're a teacher or a police officer who lives in that state, then you wouldn't get this benefit unless you itemize your deductions. And if you're not sure whether that would help you, check out my video on whether you should take the standard deduction or itemize. But that's not all. They also want to add a new deduction called a MAGA account. This would allow you to set aside part of your income for charitable donations, And then you'd get a deduction for that contribution right away instead of waiting until you actually donate the money. So, if you expect to donate money next year, you could take a deduction this year, which could lower your taxable income and save you money on taxes. But here's the catch. It only applies to donations to certain organizations, specifically those that benefit veterans, active duty military members, first responders, or their families. And it only applies to donations above and beyond what you would normally donate. So if you expect to give $100 this year, but you decide to give $150 to one of these organizations, then you could take a deduction for that extra $50. Another change that they want to make is raising the jet fuel tax exemption from 50% to 100%. So if you own a private jet, then congratulations, you get to save even more money on taxes. But let's talk about the elephant in the room, the taxes that they want to hike on universities. Right now, private universities pay no taxes on their endowments, which is the money they use to fund scholarships, research, and operations. They argue that this is unfair because public universities don't have to pay taxes on their endowments either. And it creates a competitive disadvantage for public schools because they can invest that money without having to pay taxes on it, which gives them an unfair advantage when competing for students and faculty. So they want to start taxing university endowments at a rate of 1.7%, which would bring in around $4 billion per year. The final way that they want to pay for this proposal is by adding $3 trillion to the national debt. And that might seem like a lot of money, but when you consider that the U.S. government spends over $50 trillion per year, it's not that much. Still, though, they did propose some cuts to Medicaid and SNAP that could affect millions of Americans. Now, I know what you're thinking. Why does any of this matter? If Republicans aren't going to pass this proposal this year, then why bother learning about it? Well, first off, it's important to understand how the government works. Even if Republicans don't pass this proposal this year, it doesn't mean they'll never try to pass it in the future. In fact, it's very likely that they'll try to pass something very similar to this proposal at some point in the near future. Second, just because we don't like a proposal doesn't mean that it's not going to happen. In fact, some of the most controversial and unpopular laws ever passed were passed by Congress despite massive opposition from the public. That is why it's important that we learn about these proposals and let our leaders know what we think. Even if we don't like a proposal, if we don't understand it, then we're not going to be able to do anything to stop it. Third, even if we do nothing, this proposal could still affect us in other ways. For example, if Congress needs to cut spending on social safety net programs, they could target those programs, which could hurt the people who rely on them. Or they could just cut funding to the government agencies that we rely on, which could lead to longer wait times, less services, and higher prices. That's why it's important that we understand how these proposals work and what they mean for us, because even if we don't agree with them, we might be able to find common ground and come up with a compromise that works better for everyone involved. Thanks for watching.